Mike.
This is Mike. Huh.
Yeah, so one thing about Texas, it's dry. I
It's
didn't
dry.
realize how dry it is.
It's dry up here though. The whole Midwest is dry. We just haven't
Yeah,
we haven't had rain in probably over 2 months where I'm at.
yeah. Well, I mean, there's no humidity.
Oh, we don't have it
Like,
in the
yeah,
fall, but there's
yeah,
there's humidity. Well, there is in Houston. There's a lot of humidity in Houston because of
yeah.
the
Well,
Gulf.
that makes sense. Yeah,
When I lived there, we used to go up to Dallas to get away from the humidity. And now, there was humidity up there, but just not as much as
yeah.
Houston.
Well, something I noticed, it's like my thumbs, like the my fingerprint is going away, and I don't know if that's because this it's so dry or what, but it's like my thumb print is smooth whenever I get into dry climates. I don't understand it.
I think it's because you're making so much money off your wife's art. You're fingering through all those $100 bills and it's just wiping off on
You know,
that.
I've just been flipping pennies all week. Oh no, no, yeah. No, I don't think it's a count money issue. I wish it was better, but can't complain. We're more fortunate than most. Let's put it that
No,
way.
I agree. I agree.
Yeah. So count your
Scott, how you
blessings.
doing? Oh, you're on mute.
I'm doing all right. I could be doing better, but I'm not, and I'm wondering why. Got a
Did you
lot
get
of
over it?
green, but I'm still in the hole.
Oh,
I don't
well,
get it.
it's interesting, these markets, and maybe it's just the Sooner effect. Have you gotten over the Red River rivalry game yet?
No, sometimes you just have to give up and say, I don't get it, and walk away.
Yeah, it was too bad. I watched that game. I had some good friends. They went down to it. They go every year. They root for Oklahoma. And they said even though it was a bad game for them, they had a lot of fun with all the Oklahoma fans, and it was a good time. They said
Yeah,
it's
yeah.
it's kind of a nice event, to go to. I want to go some year. I
Football
don't know.
rival, football rivalries are always, they're always a good time. The fans
Yep,
always make it a good time.
we had the
Nebraska
same.
and Oklahoma were always good.
Yeah, we always had a good time with Oklahoma, and the fans were great. And it was a good, ribbing back and forth, nothing too personal, but it was always fun. And
Yeah,
Barry Switzer, he'd be around in the crowd all the time, and he was quite a favorite up here as a coach,
yeah.
even though he beat us a lot of times. But anyway, and then I had my poor Yankees got beat in a walk-off 10th inning last night, but it was a really good game, and Cleveland played a good game, and so it's 2-1, and we move on. So you to watch that again tonight.
Oh well, they play again.
Yeah, they play tonight. Um, 3 games in Cleveland if it goes that far, and then 2 back in New York if it goes that far. So we'll see. This is a good series so far. So I
That's
love
good.
baseball. If it goes to 7 and the Yankees win, that'd be the best because then I get 7 games. But I'll take it in 2 more though if it happens. So anyway,
All right.
we'll get started. We got a smaller group today, but we'll get started. Lots happening this week, and I was thinking, I'm just looking at all these reports coming out, and really, when I look at them and the headlines come out, and it's gleeful all through, the social media and the financial news channels. I just have to say, do they ever read more than the headline? Because once you get in underneath to the real meat of the report, you get to see what's happening, and you also get to see all these revisions that we have, and these revisions are mostly all down. So the headline comes out, everyone's happy, and they make investment decisions based on that. And then the next month comes out, and it's a higher, but they revised down the month before. Okay, and so it's almost like a Ponzi scheme. It's from the way these reports are coming out. And when I was in business, if my reports, weekly or monthly, on production numbers or defects or shipments or warranty claims or whatever, and they had to be right. I didn't get a chance to revise them every month because we made decisions on that. We made allocations of capital to where we were going to fix problems, sent people out in the field, talk to customers based on reports. And I don't know why the reports we're getting out of the government were always revised or not explained well. So I'm just going to start with the jobs report that we had, a couple of weeks ago, and it bothered me. And when I went into it and looked, it was a lot of seasonal work, bartenders, waiters who don't get benefits and are not full time usually, and then the number of government workers. But so in September, the number of government workers tracked by the household survey soared by 785,000 from 21.4 million to 22.2 million, both seasonally adjusted. This was the biggest monthly surge in government workers on record. Okay. So while the government workers soared by the most on record, private workers only rose 133,000, which is pretty poor when you look at the history of these jobs reports. So I want to know what's the deal with all these government jobs and where are they coming from? And so I did a little research and I didn't have to go very far because another gentleman, his name is Paul Dietrich, he did the research for me. And he says economic optimism will eventually be cut short as unseen labor weakness is exposed. He warned that unemployment conditions are worse than analysts seem to grasp. Eventually, the U.S. economy will fall into a recession, catching off guard the Fed, the U.S. administration, and a majority of economists and analysts, Dietrich wrote. In his latest monthly commentary, the B. Riley Wealth Chief investment strategist cited that September jobless rate would have been 4.5%. It came in at 4.1, if you remember, down from 4.3, if temporary government positions were eliminated. Dietrich pointed out that this year's significant jump in state and local government employment, adding to the jobs market's perception of strength. In his view, the rise of these positions came after $500 billion worth of COVID-era stimulus programs were finally delivered to regional governments this year, which rushed to use these funds on new positions before the September 30th fiscal year-end deadline. So they had to spend this money. So they went out and hired a bunch of temps. It says, unfortunately, almost all of these jobs were listed as temporary, and most of these jobs will be lost over the next few months, Dietrich wrote. Job cuts continue as the unemployment rate is dropping 4.3% to 4.1. So what he's saying is unless these local governments have budgeted, local and state, these temporary jobs will go away because they're not going to be funded anymore by the federal government. So temporary, and you're going to start seeing those come off the rolls. But when you see the news and you see the printed media, they're talking about, oh, it's a killer jobs report, and then jobs are back and inflation's down. And, and when we look at the inflation, CPI and PPI, the cores, they both went up year over year. So inflation is not tamed yet either. So then when we look at, okay, so, the jobs are supposed to be plentiful and the unemployment rate went down, to 4.1%. This week, Nikola laid off about 135, or Nikola, the truck company, the electric truck, laid off 135 employees, roughly 15% of the workforce, amid a persistent cash crunch with little room to sell more stock as its prices slide. At 29.07%, Nikola has the third highest percentage of short interest. And then you got the mess over at Stellantis. Okay, Stellantis is cutting 1,100 jobs in Warren, Michigan, and has revealed that more job cuts are on the cards on the back of declining sales, compounding a slew of recent issues for the car-making giant. The company started cutting jobs at the Warren Truck Assembly Plant over the weekend after it stopped building the Ram 1500 Classic. And I got a lot of friends in my part of the country. It's your family, what kind of truck you drive, whether it's a Ford, Chevy, or Ram. Those are the top two priorities of what you talk about, or football, college football. So the Ram is interesting. Then I understand Stellantis was trying to move it down to Mexico, and depending on how the election goes, we'll see if that plan remains the same. Stellantis also announced to labor unions that it'll suspend production over a number of days in November at its 3 Italian plants. Okay, these measures are necessary to adjust production to the current market conditions and to guarantee an efficient management of resources, the car maker said. So they also, this is Fiat bought Dodge Chrysler, and then they changed it to Stellantis, and they also, and I believe Maserati and some other high-end car, not Aston Martin, Alfa Romeo, I think. And those sales are way down also. Also, as a part of the deal with the United Auto Workers, Stellantis agreed to invest nearly $5 billion in an area for a new EV battery plant, retooling an auto plant, constructing a parts distribution center, and an EV battery plant. The plant was expected to create 1,300 jobs and launch in 2028, but Stellantis announced in August that the reopening would be delayed, ensuring the company's sustainability. So you think about that, and everything that's coming out, they may not be around here in the next couple of years. The way it's sounding, I know that the Dodge family has been talking about buying back the Dodge brand and bringing that back. We'll see how that works. But again, that's a huge company. It's a worldwide company. It's a company that has a lot of parts suppliers who supply parts to them, and they'll be affected also. So keep that in your mind. John Deere says it's laying off an additional 300 people in its manufacturing facilities in Iowa and Illinois as demand for farm equipment declines. And we just got done with harvest here, and we had a really pretty good harvest, but the corn and the prices are down so much, they're going to barely break even, according to my big farmer friends. So we'll see how that works, because they still have a bunch of production and storage from last year. So I asked him, I said, well, why don't you guys get together as farmers and control the amount of supply you have? Okay. And then it's all about supply and demand, and don't plant as much, and get your prices back up. He said, well, we tried that, but we always have all the people who say they're going to do it, and then they don't. And then, they reap it. So we never get together on that. Said, all right, well, let me know. Trent's not doing anything next week. He can come help negotiate that. So it's the latest in a series of layoffs at John Deere. Since September 23, more than 1,600 employees have been laid off from plants in the Midwest, and the company moves to more of its manufacturing to Mexico. And we'll see, again, depending on this election, how many of these plants are going to be changed. Getting a 100, 200, 300, 400% tariff on your equipment that you're trying to move jobs out of the United States, and then go to Mexico and then bring those planters and harvesters back up here. That ain't going to work if the election goes one way. So again, here's more big company laying off, moving to a different part of the world. Again, parts suppliers all over the United States and the world who supply these guys will also be affected, that you don't hear about. This week also, multiple teams at Meta were hit by layoffs on Wednesday. The company confirmed in a statement to TechCrunch, noting these changes were made to allocate resources within the company. So technology is getting hit, including Intel. Intel notified 1,300 Oregon workers this week they'll lose their jobs next month in one of the single largest rounds of layoff in state history. The job cuts hit 1 out of every 18 Oregon workers at Intel, the state's largest corporate employer. So again, I could go on and on with the layoffs, but then if you look at the jobs reports and you look at the unemployment, it's totally opposite, of what I'm seeing. And so, it's just, with me, I'm like, okay, this doesn't make sense to me. I'm pretty logical. So I'm not digging these reports and what they're trying to tell us. And let's talk about manufacturing. Okay. The Philadelphia factory Fed manufacturing index came out, and it rose to 10.3 in October 2024, a jump from 1.7 and surpassing the expected level of 3.0. So anything under 0 is contraction. So in this month, Philadelphia is growing. Current general activity, new orders and shipments all experienced growth, with new orders and shipments returning to positive levels. However, the employment index decreased. So their shipments are going up, but they're laying more people off. They have less people, indicating a stable employment condition, which to me doesn't indicate that. Price indexes slightly decreased, yet still point to overall increases in pricing, whatever that means. So price indexes decreased, but they're still charging more. They're charging more inflation, and they're doing it with less people. Okay, unemployment. Then you had the New York Empire State Manufacturing Index came out, and that's totally opposite. It plummeted to negative 11.9 in October, down from positive 11.5 in September. So over 22 points that came down, pointing to a renewed contraction in the New York State at a solid pace. New order index slumped 20 points to negative 10.2. Shipments index fell 21 points to negative 2.7. Meanwhile, the New York Fed's gauge of prices paid for materials increased to a 6-month high of 29. Again, prices are going up, while an index of prices received by state manufacturers also accelerated. So again, these are just month-by-month reports. So if you back it out a little bit and just look at Another report that came out, U.S. industrial output. Industrial production in the U.S. fell 0.3% from a month earlier, September, more than the market expected of 0.2% decrease, and after a downward revised 0.3% rise in August. So again, here's your down revise of a rise in August. Manufacturing output, which makes up 78% of total production, dropped 0.4% compared with market forecast of 0.1% fall. For the third quarter as a whole, industrial production declined at an annual rate of 0.6%. Then we look at capacity, the amount of capacity factories have to produce. Okay, you always want to be at 100%. Capacity utilization in the U.S. fell to 77.5% in September, marking a new 8-month low from a downwardly revised 77.8% in August. Again, downward revised, and below forecast of 77.8%. The rate is now 2.2 percentage points below its long run average. And what happened to the stock market? When all this reports came out, stocks in the U.S. were higher following this strong economic data, is what I pulled off of the CNBC site. Now let's talk a little bit about retail sales, because that came out this week, and it was highly ballyhooed as the consumer is strong, consumer is resilient. Retail sales in the U.S. increased 0.4% month over month in September, well above a 0.1% gain in August, and beating market expectations of a 0.3% rise. However, okay, if you go beyond the headlines and you dig into the report a little bit, the headline retail sales month over month beat was not enough to keep the year-over-year print improving, as it dropped to 1.7% year-over-year, the weakest since January. Okay, month over month up, yearly still down. On an adjusted basis, retail sales fell 7.5% month over month. Also, on an unadjusted basis, retail sales were flat, 0.0 year over year, which means, roughly speaking, real retail sales were down notably on a year-over-year basis. This was the biggest positive September seasonal adjustment in history. So what they did is they went in and they adjusted for seasonality. And if you look of all Septembers in history, it's the largest adjustment ever. Okay, and so I get the feeling, just looking at these, they're manipulating these numbers to make them look better. Okay,
Mark, when you say adjustment, they're adjusting for seasonality, meaning, like, what is that?
Seasonality, like, I'm just gonna say around Christmas time they adjust because they hire more temporary employees and things like that. Now, I didn't dig into that because I didn't have time. I was going to.
Yeah.
There's a where did I put it? Anyway, I pulled off there it is. I pulled off all the numbers. Oops, can't see it. And it says if you want to, you can go to some website and they'll explain what that seasonality did. But without seasonality, okay, it's retail sales is way lower without those adjustments, way lower, and you can go look at it on their own site.
Yeah.
So remember also that retail sales figures aren't adjusted for inflation. So if I'm buying, let's say I'm buying $100 worth of groceries every week, and inflation has now gone up, and I'm buying $120 worth of. So on a retail sales point of view, I'm buying more. Retail sales are up $120, but really I'm getting the same amount for what I'm paying with. So without that, again, that's a manipulation of the data, and it's only manipulation because they don't tell you that. Okay, if they would tell you that, then we could figure it out ourselves. But you got to dig into the data to figure it out. So I mean, I was looking at remember when David Muir was debating Donald Trump in the presidential debate, and he said that the crime statistics had gone down. So I'm even looking at how even in other departments like the FBI, they're joining the data revision party also. So just recently this week, an investigation by Real Clear Investigations found that the FBI updated its crime statistics in September, showing that rather than a 2.1% drop in violent crime as originally reported, the United States actually experienced a 4.5% rise in violent crime. The new data set showed thousands more murders, rapes, robberies, and aggravated assaults. The more than 6 percentage point change is unprecedented in recent FBI statistics reporting, William and Mary professor Carl Moody told the outlet. I have checked the data on total violent crimes from 2004 to 2022, he said. There were no revisions from 2004 to 2015, and from 2016 to 2020, there were small changes of less than 1 percentage point. The huge changes in 2021 and 22, especially without an explanation, makes it difficult to trust the FBI data. The only announcement of the changes was a single footnote in the 2023 crime statistics report, where the agency acknowledged the 2022 violent crime rate has been updated for inclusion in the CIUS 2023, and that's it. So why do so many reports have great headline numbers only to be revised down with little fanfare in the future? So again, it's hard, and if you lose trust in the reports, how do you make decisions about investing? How do you make decisions about anything? How do you make decisions about your business? Okay, let's talk a little bit about. There's a Bob. Is Bob on here still? I don't see him.
Yeah, he's here.
Is he? I don't know if you want to talk a little bit about his manufacturing, if he's gotten back into it. He's still on
It
mute.
may not be.
Okay, all right. So let's talk about the consumer, because with retail sales up, everyone's saying the consumer is resilient. Let's look at a few surveys that came out. Prime America's latest financial security monitor report for the third quarter found 55% of middle-income households now rate their personal financial situation negatively, a 6-point jump from the previous survey. For the first time in a year, a majority of middle-income households are feeling negative about their personal finances, said Glenn Williams, CEO of Primerica. In fact, this latest report represents the highest negative rating we've seen since we began fielding this survey exactly 4 years ago. Today, Gallup poll came out. The majority of Americans, 52%, feel worse off today than 4 years ago under former President Donald Trump, Gallup poll found Friday. Cost increased by about 20% across the board after the current administration assumed office and instituted their economic program. Gallup reported its findings predominantly shaped by soaring cost. Gallup's latest measurement of Americans' economic views from October 1 to 12 poll puts the ECI at negative 26, one of the worst election year readings, along with 39% better off reading from September. 46% of Americans describe economic conditions under the current administration as poor, while 29% is only fair, Gallup found. Whopping 62% said the economy is going in the wrong direction. I'm going to stop here a little bit, because I was talking to Trent a little bit, and he's been down in Round Rock, Texas, and his wife is an artist, and she went to this huge art show, and it's like, I forget how big, but it's miles and miles of this art show, and it's people fly in and helicopters and buses, and we've been talking since he's been there for about a week. You know, this could be a kind of a gauge on the economy, and so I asked him about how are things going down there. And tell me what you told me today about just, you know, going out with the people who've been doing this for years.
Yeah, so the vendors here, we went to dinner again with a couple who have done this show for 11 years. Just give you a scope, this has been going on for 20 some years. It is in the town of Round Top, Texas, which is 20 miles or so from LaGrange, which was made famous by a ZZ Top song. Still trying to figure out what's in LaGrange that made ZZ Top write a song, but but anyways, this has grown into a really big event. There's a lot more commercial villages. It's a 20-mile stretch, and just imagine little villages of tent cities, and I'm talking like big circus tent type cities, along with permanent infrastructure and that kind of thing. So we came 2 years ago, and when you drive in, it would take probably about a half an hour to an hour to cover 2 miles just driving. There was so much traffic. Today, no problem with traffic. And the vendors we've talked to who have been here for, say, 5+ years have said they've never seen it this slow. And then the consumer who is here is not spending money on anything really any more than, say, $1,000. And this is where people would shop for furniture, antique stuff, art, that kind of thing, big painting kind of things, sculpture, that kind of stuff. Ginger ran into, she had three retailers who she used to sell to when she wholesaled a part of her product line. She used to sell to 400 stores. She was a just under $1 million business at the time at her peak. And three of the stores she ran into all been in business 15 plus years. And they all said this has been the worst year in the history of their business, like by a mile. And it really just seeing the behavior of the retail person. And I was telling Mark, I was checking somebody out for Ginger the other day, and it was this group of ladies, and this lady's got probably a couple $1,000s worth of clothing on. I mean, she's got a lot of money invested in clothing. She pulls out a Visa to pay, and it's like $150, kind of purchase. Card is declined twice. Pulls out another Visa. Card is declined. She pulls out the platinum and says, "This doesn't have a limit." And she runs it and it goes through. And it just hit me that it was like, and she was in her probably early 30s, really nice lady, and her whole group of friends are all sort of pulling out the big credit cards. And it just sort of said to me that things are slowing rapidly. Um, People are not purchasing big items, which is typical, like you're seeing it in the car industry. But on a consumer level, I think people are really, really tight. And when three retailers that Ginger used to sell to, who are very successful retailers, one of them is actually down the street from us in Florida, say, "I've never seen it this bad." It tells me something. It tells me that the consumer is tight on money. Inflation is affecting everybody. And what we're seeing in the headline news is really not the total truth. And I guess my question mark is, when does it show up? When does the number go from normal to like we've seen in the charts back during the big recession periods, like during the pandemic or during the great financial crisis, like the dot-com? When does that number show up? And is it a drastic, 1 month it's okay, it's normal, next month it's like a cliff dive? And that's what I'm really wondering when that's going to show up.
I
So
think you gotta consider that in the 70s when they were measuring inflations, in the 80s when they were measuring inflation, in the great financial crisis when we were measuring, all those reports have changed and they're measuring different things now. Okay, especially in inflation, we have core inflation, minus energy and food, because no one uses energy or food, so we don't want that in inflation. You have different like housing's in there, and it's a survey, and they measure inflation on housing by calling you or me or Paul or Scott and say, hey, what do you think you could rent your house for if you had to rent your house? And you're like, oh, $4,000 a month or whatever, no, not even knowing you. And that's how they get that data. Okay. So, and then we make decisions based on that. So if the data is not right, how do you make correct decisions about anything?
well, and
It's
think if they're calling people and surveying, nobody has a landline anymore. So how many people are they surveying now?
well, and
I don't answer anybody I don't know who it is.
well, that's a good point. And they're saying that the business side survey, there's a household survey, and the business side survey, that they used to get like 70%, 75% of a feedback. Now they're down around 32%. They're not even getting people calling them back or anything anymore. So the sample size has really gone down also. So I mean, again,
So,
I don't want to get into the weeds of that, but it's just you just got to be vigilant and look around and see what's happening around you and your community and with you personally. And I know what's happening here in the Midwest with agriculture and what I'm seeing, and what I'm seeing when I go to restaurants where, 2 years ago during, a football game or a volleyball game, they'd be packed. And now you can walk in and get a table right away. It's just,
yeah.
it hits the lower and medium class people first, and then it hits the middle class, and now we're starting to see it hit, the upper middle class, the six-figure crew. Um,
Yeah.
And I got
and
other things.
and
Yeah,
that's what I'm seeing here.
that's what you're saying. Yeah.
Yeah, I mean they're walking around with rocks on their hands and all just done up, and they're pulling up in Range Rovers and G wagons and Porsches, and you're just not spending a lot of money. Money's tight, so it's moving up the income level, you know.
Yep.
So for sure.
Okay. Well, thanks for that because I thought that
Yeah,
was pretty interesting, and I see it too. And let's go on to we've been talking about commercial real estate, and if you think about what's happening in China, China is still, they're trying to stimulate their economy because it's got drugged down by real estate. And even here in the United States, commercial real estate is not doing well still. In fact, there was a sale of a million square foot Manhattan office building. It was listed on an online auction site, 10X, and it was completed Tuesday for $8.5 million for a million square foot office building in Manhattan. That's 97% less than the 332.5 million that the seller, Swiss bank UBS, paid for that property in 2006. That's a huge hit on property when you think about real estate.
yeah.
Okay. So think about that. You're sitting next to that building and your property tax is going, well, the nice thing about it is maybe my property taxes will go down because this guy sold so low.
Right.
Probably not, but I mean, that would be the only good thing about it. Uh, but again, if you use collateral, real estate is collateral, and your collateral, and that's part of your balance sheet. And your building that used to be worth 330 million is only worth 8.5 million now. How does that make you feel as as your wealth effect? It doesn't. Same as if your house
Well,
went down. Let's say
well, the
your
other
house
side,
was sold for $85,000, and you bought it for 332,000. I mean, that's kind of the way it would be. You're like, oh, so
yeah,
um,
the other side of that is if you collateralize that property and you go back to have it reevaluated, your credit line reevaluated, they'll look at that and go, nope, we're shrinking your credit line.
right,
So that really puts the squeeze on that business. So first of all, if you could have come up with 8.5 million and paid the taxes and insurance on that probably for the next 5 years, that's a hell of a steal. Uh, but yeah, I think more and more you're going to see companies get squeezed like that.
yeah.
Yeah.
And that's just, that's not just commercial. We're seeing that in the residential real estate. And if you look at, the Fed lowered by 50 basis points, and that was going to help everything out. Well, the 10-year yield has gone up to 4.1% today. So what does that do for mortgage rates? Well, the average interest rate on 30-year fixed mortgage went up to 6.52% this week. Okay, it's the highest in 2 months compared with to 6.3% in the previous week. The average rate for a 30-year mortgage backed by Fannie or Federal Housing Administration was 6.2%, 6.42%, up 20 basis points. Okay. So again, the Fed can lower all they want, but they don't have control over the 10-year. The bond market's telling us something's not right. Okay. And so what does that do? It affects mortgage applications. Mortgage applications sank by 17% from the previous week in the second week of October, extending the 5.1% drop in the previous week to record the sharpest weekly contraction in mortgage demand since 2015, when excluding the period of unprecedented volatility at the start of the COVID pandemic. The volume plunge in the volume of mortgage applications was in line with the sharp increase in benchmark mortgage rates as strong jobs report and hot inflation print triggered less dovish expectations for the Fed and lifted long-dated treasury yields. Okay, so again, what is the effect of the Fed, and is it actually helping? I mean, in mortgage rates, everyone thought it was going to go down. They thought it would affect your credit card rate. Has anyone's credit card rate gone down from 33% to 31% yet? I don't think we're going to see that either. And also, housing starts came out. And housing starts in the United States eased by 0.5% from the previous month to an annualized rate of 1.354 million units. And building permits in the United States fell by 2.9% to a seasonally adjusted annual rate of 1.42 million. Again, so when you look at real estate, you look at both commercial and home real estate, it's slowing. It's slowing. If not slowing, it's getting worse. Okay. So just keep that in your mind as you see all the happiness in stock markets that are at current highs. current highs are great, especially for swing trading, especially for investing. That's kind of why you see, in spending, you see some of the upper class people who have a bunch of stocks and have a bunch of equities, they're doing well because they go look at their bank account or their brokerage account. It's looking pretty good. So this week, again, it's really strange, the tale of two companies. We look at ASML, okay, it came out with their earnings. And their customers include TSMC, Samsung. On Tuesday, they delivered a gloomy sales forecast for 2025, saying the semiconductor market beyond AI has been weaker for longer than expected. ASML holding shares crashed the most in 26 years on Tuesday after the Dutch semiconductor giant accidentally posted its third quarter earnings one day before it was officially released. Someone's going to get in trouble for that one. The leak report revealed a 53% plunge in bookings, far below the average expectations of Wall Street's analysts. On ASML's earnings call this morning, CEO Christopher Fourquet apologized to investors for the Tuesday's mess, calling the early earnings release a technical error. And then, tale of two cities, TSMC, the world's largest contract chip maker, bet on sustaining its strong growth after reporting on Thursday a forecast beating 54% jump in quarterly profit, driven by soaring demand for chips used in artificial intelligence. TSMC is Asia's most valuable publicly traded listed company, said third quarter revenue rose 36% year on year, 23.5 billion, better than the company's previous forecast of 22.4 billion to 23.2 billion. So again, here we have the tale of two cities. ASML came out, everything dumped in the chip. TSMC comes out, everything goes back up. It's just like I was talking to Trent the other day. It's like when you go to a little kid's soccer game and, they don't hold their positions. They all run after the ball. The ball goes over here. Maybe the goaltenders stay on the goals, but the whole team runs all over the field. And I kind of feel like sometimes that's the way we see markets day to day, hour to hour. The people are just chasing. So again, be careful. That's why we use technicals to look at charts, and make a more of an informed decision than just chasing. So when you see a stock go way down, like, ASML, you go, wow, it's on sale. Well, is it on sale or is it not? Let the chart tell you, don't guess about it.
Mark, on ASML,
Yeah.
they said their non-IA stuff is not performing well.
Yep.
That's a representation of the consumer. That's the vacuum, that's your toaster, that's your microwave,
Cars.
Those are
Telephones.
items that consumers buy versus a corporation buys. And so it's a really good insight in a way. I mean, they have a diverse business versus probably Taiwan Semiconductor. And it gives you a better idea what the average consumer is actually spending money on, and they're not, or not spending money on. Yeah.
Yeah. Well, if the consumer doesn't have money, consumer is 70% of the US economy and they're not spending, it's going to have an effect eventually on all these companies, no matter what you're doing. Okay. Because somebody has to buy all this. Somebody have to monetize all this somehow. And that's been the big issue with AI is how is it going to be monetized? How much longer can you keep spending, without being monetized? And you brought up the fact about NVIDIA, although I forget what their revenue was, 112%. You brought up a good chart that said, it's going down. Okay, it's hit a peak and its revenue is actually reducing, even though it's high.
Yeah, I mean, you look at I've been tracking the last 5 days of its open, high, low, close charts, and even though it's gone up, it's still close. You have lower highs and higher lows, which could be a sign that the thing is basically creating like a spring effect. But yeah, it's one of those things. It's like it keeps hitting that roof and trying to get through, but it's not getting through, and the volume is it's okay. But I think it's an example of just how this market is sort of, I don't know, in a way, I think the institutions are weaning themselves off these high flyers, and they're looking for elsewhere, low, opportunities, value opportunities. And as we see inflation rise, maybe that's where they go to assets or sectors that inflate with inflation, like consumer staples and commodities and stuff like that.
Yep.
So
Well, I think this week the banks came out, a lot of the banks last week and this week, and they're all reporting profits, and like Citigroup said, quarterly profits rose 10% from last year, but the bank faced higher losses in its credit card business and a $136 million regulatory fine. The bank's quarterly earnings were weighed down by losses tied to consumer lending, as higher interest rates have started to hurt cash-strapped U.S. households, which is what your example with the credit card tells me. Profits in Citi's U.S. credit card and consumer banking business fell 74% from a year ago. That's their profits, okay, from credit cards. Credit losses in those businesses cost the bank $2.3 billion in the quarter, up from $1.5 billion a year ago, largely driven by a rise in delinquent credit card borrowers. Year-on-year growth in revenue from credit cards issued on behalf of retailers such as Costco or Home Depot also dropped to 6% from 18% in the first quarter, and a sign consumer spending is weakening. That's Citigroup. Okay. Bank of America reported third quarter 2024 net income of $6.9 billion and earnings per share of 81 cents, beating the analyst consensus estimate of 77 cents. Net profit fell 12% year on year due to higher provisions for credit card losses and rising costs. Okay. Those are the things you only see the headlines, okay, that profits are up and blah, blah, blah. And then you get into the 10Qs and then you see actually what's happening within these banks. Okay. They're starting to lose money. And we saw it a year ago when they started putting more money in their reserves to cover these delinquencies that they knew were coming a year ago. We can go back and look at our platinum calls, and we've talked about that, I know. Another thing I think that's out there that doesn't get talked about a lot is Boeing. Okay. So just days after Boeing announced plans to cut 10% more of its workforce due to intensifying financial pressures, such as dwindling cash reserves and mounting risk of a credit downgrade, as well as drawn out strike, the beleaguered plane maker filed a $25 billion shelf registration on Tuesday morning. They're trying to get more money, borrow money. Separately, Boeing entered into a $10 billion supplemental credit agreement. I think it was with Bob down in Florida. Bob's going to lend him some money because he's a supplier to him. So it would be good for him to do that. It noted that the credit facility provides additional short-term access to liquidity as we navigate through a challenging environment, adding that it has not drawn down on this facility or existing credit revolver yet. The latest strike estimates from JP Morgan analysts indicate Boeing will lose $1.5 billion each month if workers stay off production lines, commercial jets, and continually picketing in the streets. 3 major rating agencies have warned the strike could downgrade Boeing's investment grade credit rating to speculative territory, in other words, junk, then go try to find a loan or find some money if your credit rating is junk. Okay. According to preliminary figures, Boeing expects to report third quarter revenue of $17.8 billion and a loss of $9.97 a share. And as a side note, Boeing's rival Airbus is slashing 2,500 jobs in its defense and space division as it continues to struggle to find footing. French aircraft manufacturer announced the cuts Wednesday as part of plans to streamline its structure amid a continued complex business environment. So you think about that's aerospace and defense, not only Airbus, but think about the secondary and tertiary suppliers that are supplying Boeing or supplying Stellantis, and how that's going to affect the economy as that moves out. When people like Bob, his orders start getting cut, and then Bob says, "Oh my gosh, I don't know how much longer I can maintain, full employment because I don't have enough work, to pay all these people," and that's just going to trickle, out. Well, not even trickle. It's going to race through the economy the longer that Boeing and Stellantis and Ford, and GM have these issues. The other thing that really troubled me this week is True Value. Okay. I remember going to True Value with my dad. We had a little store down the town I grew up in. We go down there and I just loved it because I could get a sack full of nails or screws, and I could go hammer them into wood when my dad was doing projects. True Value, 75-year-old hardware store brand, filed for bankruptcy and is selling all of its operations to a rival company. True Value said it faces a significant cash crunch as the housing market stalled and consumers have become far more picky about discretionary purchases like hardware. Bigger rivals like Home Depot and Lowe's have also been in a year-long slump since the pandemic boom, but they remain in a significantly stronger financial situation than True Value. And then on the other side, TGI Fridays, okay. When I lived in Houston, I used to live in TGI Fridays. I loved their potato skins. I could make a whole meal out of their potato skins. And sitting in that little bar that looked like the Cheers bar, it was awesome. TGI Fridays is making headlines once again as a casual dining chain recently closed at least 12 locations across the United States over the past month. This latest round of closures comes on the heels of declining sales and increasing operational costs that have plagued the brand in recent years. And then LVMH, okay, and this is more like what Trent was talking about with the art area. French luxury giant LVMH reported a 3% fall in third quarter sales on Tuesday, undershooting estimates in its first decline in quarterly sales since the pandemic as demand in China and Japan weakened, likely exacerbating investor worries. Chinese consumer confidence has slumped to all-time lows of the COVID-19 era, LVMH chief financial officer said on an analyst call, though he added that the company still believed in the future of the market. The fashion and leather goods division, home to Louis Vuitton, Christian Dior labels, reported a sales decline of 5%, well below consensus expectations for 4% growth in the first fall for the business since 2020. Fashion and leather goods comprise almost half of LVMH revenue and nearly 3/4 of its recurring profit. In Asia, excluding Japan, of which the Chinese market is a dominant share, the sales decline worsened to 16% slide from a 14% drop the prior quarter. So again, this is just looking out into the world and seeing what we see. Okay, you see the reports, everything's rosy, and then you go out and you look at what's actually happening, and you just got to kind of keep that in your head. That's why we swing trade. That's why we do what we do on this Platinum channel. That's why we look at charts. That's why on the Gold channel, Kerry talks about fundamentals and how fundamental companies are. So again, I just want to be cautious that these reports out there, take them with a grain of salt because they're only headlines. And I think some of what we're seeing has to do with the election. And we got an election in a little over 2 weeks, and we'll see what happens. I think some of the glee we're seeing in the markets right now, I mean, it could be a part of what they're calling the Trump trade. That looks like that President Trump may win this election, and we'll see what happens. So I don't want to be always gloomy because there is some good news, and the good news is in the U.S. banks. And U.S. banks have experienced a massive financial gain due to the Federal Reserve's high interest rate policy. The windfall is estimated to be around $1 trillion for the banks. The situation arose because banks earned higher yields under deposits at the Fed. Many financial institutions did not pass these increases on to their customers. The Federal Reserve maintained elevated interest rates for 2.5 years. Okay, that's when they raised the rates. The Fed rates are what banks loan to each other, what they loan to their banks. This extended period of high rates allowed banks to earn more on their deposits. The Fed overnight rate reached 5.5%, significantly higher what the banks paid to their depositors. Okay, so that means that I'm getting 5.5% by putting my money overnight with the Fed, and then you put your money in my bank, and I'm giving you 0.5% back. So I'm making 5%, and that's what that's all about. So the banks are doing well as far as the higher interest rates. So that we got going. The other side of that of higher interest rates is the federal fiscal year that ended September 30th. The budget deficit was 1.8 trillion, and the interest expense on U.S. debt was 950 billion. That's up 35% from the prior, due mostly to higher rates. So again, that's all I have on my rant for today. Again, I just want to make sure that the news that we get, you look into it a little bit and see what's actually happening. You can make up your own mind. I don't need to tell you, and that's what I do. I look at it, I look at what's happening around me, and then I make my decisions. But when it comes to what we do in Platinum, which is mostly swing trading and looking at charts and technical analysis, that's why this is so important, because technical analysis can help you out. Okay, it can get you out of situations before they get too bad. So it protects your downside of your loss, and it lets you know on the upside how far you can go up, and based on your risk tolerance when you want to get out. It's a tool. It's not always 100% right, but it's a tool we use and a tool that we talk about all the time, in the Platinum channel. So that's what I got. Bob, you look Anything from Bob today? I see him. He's on mute. There he goes.
I'm a little quiet today,
Okay.
so.
How you
But
doing? Are you feeling good?
I'm doing okay. Yeah, I feel
Good.
good. I'm in, I'm in good shape. Um, it's I don't know. It's like I gotta shut it off. I shut it off this week. I can't listen to the craziness of, I call it lies, the white lies, that how everything is doing so well. I don't see it that way, unfortunately. Yeah, I
Uh,
agree with you. My portfolio is doing fabulous, but put that on the side, nothing else is doing fabulous. So it just these numbers they come out with, and you're listening to Steve Gleasman the other day, he's white coating it, and Centelli is like tearing into him. It's the same old story. Um,
That's a show.
yeah,
It's a
I
show.
sure, but
Yeah.
Steve Gleasman doesn't want to ruffle the feathers and make anything that may rub certain people wrong, because then he'll get cut off of information.
Yep.
That's my angle on it.
No, I agree with
And I
that.
think it's also advertising dollars. If
As long
they
as you
come
keep
out and
saying the
say,
right
here's the
things,
reality of
right?
it, everything sucks, I'm not gonna watch CNBC anymore because it's so depressing.
Yeah. So
You know,
since you're in Texas at this antique show, right? Is that what it
it's
is?
antique art and a lot of stuff. But yeah,
So how's everybody opening their pockets? Is the antique sellers feeling flush, and they can go out to the bar every night?
no, no, that's the Rick Santelli answer. No, it's
No.
not. People aren't spending money. Um, I'll give you some idea. We came here with the idea that we would do. Ginger brought about $150,000 worth of art and stuff. We were thinking maybe probably a $60,000 2-week show. That would be awesome, right?
Mhm.
We're 2/3 of the way to breaking even on our expenses, and if we walk out of here with $25,000-$30,000, I'll be happy as can be. And
That's that's
she has adjusted prices so we
so
don't have
less
to haul
margin,
stuff back to Florida.
less
And
margin,
yeah,
right?
but I mean, she makes incredible margin on her product because it's really its materials and her time. But yeah, and and everybody around her is the same thing. You know, Fortunately, she's selling product because she has a product that is tried, true, and tested, and she's willing to adjust her numbers. But across the street is I don't know, probably 100,000 square foot facility with different vendors in it, and we're talking corporate art, sculpture, and that kind of thing. And I'm looking over at their parking lot right now, and it's probably one a quarter full. When typically that would be jam packed, and there would be a cop directing traffic out front. So it's it's like we talked about earlier, it's people just don't have the money they used to have, and corporations don't have the money they used to have because it's expensive. But yeah. Now, if I was a gold dealer, I'd be doing okay right now.
I
So
don't know
I was
about
looking
that.
at it.
I listened to yeah, if you bought it, earlier, yes. But
Yeah,
but I understand the precious metal guys aren't doing well either, specifically in the silver and a few other metals. They're dropping their margins to get the sales. They're all having trouble. And
yeah.
I I I really haven't dug in to understand why, and no one has told me why. But I find that, strange too, because many people are allegedly stocking up on that stuff, whatever their reasons are. You know, there are a million reasons out there.
I think I was just looking at a chart of GLD. Mark, if you want to bring it up.
Okay.
We talk about swing trading. 4 days ago, you would have had a nice little setup, and now it's moving higher. I think we have for a year, a couple of years, have looked at tech or AI related companies as opportunity swings. I'm wondering if boring stuff like metals, gold, those will be the opportunities here in the near future. So, what do you think, Mark?
Well, I think money moves where value goes.
Mm-hmm.
That's gold. Look at Bitcoin.
Yeah.
Yeah, I'm looking at it.
Yeah. So, a lot of people are saying, well, this is a cup and handle right here.
Uh-huh.
So if that's a cup and
Yeah.
handle, and the way people measure it, they measure it from here to here. And if you put that where it breaks out, it goes up to $115,000 from a technical pattern chart. Look at it, 115,000.
Yeah, but before it does that, it's got to cover that gap up.
Yeah, it may not, but it could. But it'd have to go back down to the 200, which it's now over the 200, which is good. I'm seeing good strength in the MACD. We're seeing some good stuff there. If you look at,
Like the strategy.
yeah, well, MicroStrategy has done the
Gold is
same.
gold is way less risky. I mean, Bitcoin has been here before. Gold is approaching new highs. I mean, they're different animals.
Well,
It's also
Bitcoin's
a reserve.
Bitcoin's
investors.
Bitcoin's coming to new highs too, though. I mean,
Come on with that line, Paul. I mean,
What
you have
part?
baby boomers versus millennials, right?
Yeah, I'd rather be in gold.
Well,
I'm
you
not.
look at
I'm a baby boomer. I'm a baby
exactly
boomer.
the point, Paul.
Got you. Got you. Yeah, all right, yeah.
You're a little slow today.
I'm a boomer. I'm a boomer too, but I'm in Bitcoin and not gold. And you can see Bitcoin's coming up on its high too.
That's a fun ride.
I'm a millennial and I prefer gold. So there you go.
No,
Yeah.
that's good. I mean,
That's unusual.
when you look at it, everyone sees it as a store of value. Okay. And it's just this is more digital value. If you're a Bitcoiner, it's digital value versus, something you have to store and hold. Okay. And the way I look at it, and I have nothing against gold. I just don't want to carry 20 tons of it across the border if I have to leave. I can just stick my Bitcoin.
I agree with you. However, put yourself in the prepper shoe, right? If you're holding quarter ounce gold, quarter ounce chips, coins, whatever you want to call it, what's gonna have more value in the prepper world? I'm just curious and asking a stupid question.
I can tell you exactly.
The
Because
Bitcoin's gonna have more value, or is it the gold and silver?
what's going to be more value, at least where I live, Bob?
Where?
Jack Daniels.
Yeah, your cattle.
Jack Daniels. Jack Daniels, ammunition and seeds and water. Having your own well.
Ammunition, don't worry about that. But cattle, that's going to be worth something.
Absolutely. That's what.
But what do you trade for? Bitcoin? No, they're not going to trade. I don't believe they're going to trade Bitcoin. I think they're going to trade gold and silver and all the other.
Well, I just think of it. From a technology standpoint. If your electricity goes out,
you're done,
and you can't charge your phone, how do you transfer Bitcoin?
Yeah.
Well, again,
that's extreme.
I still it's not extreme. In my pocket.
And how much gold can you eat, Bob? How much will that
exactly? I think of it. What are you going to do with that Bitcoin in a prepper mentality? What are people going to do with that? Nothing, right? But at least with gold, some people will still wear it. right? Some people will still use it.
Oh,
You could
yeah.
still use it for certain things, and it just has that intrinsic value that Bitcoin does not.
Well, I disagree, but
You buy
that's,
ammo with it too.
well,
Well,
I'm just
let's
saying.
hope we don't get
Well,
to the point where
you know
we
what?
test these theories.
If we get
I went
to
off the rails. Okay, Mark.
if
I
we
went
get
off the rails.
if
You
we
know,
get to
we're
a
just testing you there.
if we get to a prepper situation, the last thing I'm worried about is how much gold or silver or Bitcoin I have. I can tell you that right now. It's where am I getting my electricity? Where am I getting my water? How am I protecting my property?
Well, you won't
And
be
how am I
getting
eating?
electricity. You won't be getting
Well,
electricity. You're gonna be back to candles and flashlights for as long as your batteries work.
well, I got generators here, so I'm a little more
Exactly.
prepared.
So
Yeah.
that's as far as it's gonna go right
You
there.
got your Cybertruck.
I do.
Hey,
My
Trent.
Cybertruck.
Hey,
Yes, sir.
Trent. Didn't you say that you were gonna come up with some kind of portfolio of your own that you were gonna share in the platinum? Something where
Yeah.
where you were gonna put ETFs or some kind of trading platform, just like Mark does on your own.
I've actually worked on it and I haven't put it up because I've been consumed with a bunch of other things for the last 3 weeks. So right now I'm sort of treading water, but yeah, it's something probably in November I'll put up with some different ideas and my thoughts and stuff. But yeah, it's I got a lot of projects I'm working on right now. So, but yeah, I'd like to put that up.
Okay, thanks.
Yeah.
So
Hey,
I have
Jason, you got
something, Mark, and I wanted to enlighten you guys. I did some research. Did anybody listen to the Fastenal call? Because I was blown away that they blew away their numbers. And I was just curious if anybody listened to their earnings call. And I wanted to caution you if you are investing in them because they only made their money in the last 4 days of the quarter because of the hurricanes. Otherwise, they would have been down. In my field, do you mind if I go on?
Oh, go ahead.
Okay.
go ahead.
In my field, in the fastener industry, their sales were depressed on fasteners 4% in the last quarter. Not only that they were depressed, they made their money in Florida in the last 4 days by government contracts and buying safety cones, secure walls, all these things that they use, shovels, safety vests, gloves, all these different things that they use in these storms, sandbags to protect homes and things or buildings and government buildings. That's where they made their money, and they're seeing a lot of pressure in the general contractors have like dropped off the edge of the earth. So they're not getting construction crews in. And their growth is only in government contracts, which is what I will say to you is my growth. But the growth in the negative, and the only way that you're going to come positive if you have these events, and that's where they're standing right now, is that they're having trouble bringing their numbers up. So I just wanted to tell you guys, if you are investing, if you don't have another event, be careful of the quarter when it reports. I know it's swing, but the same thing does swing. Yeah, I like that.
Thanks, Bob. Jason?
First off, hey guys, how's everybody doing?
Hi, Jason.
Good.
How you doing?
Oh, just peachy. Hey, I wanted to say a few things. One, for us poor people who can't afford nice paintings that just have movie posters on their walls. I went to I'm in California, and I went to the big fair in our area, 2-week long fair, and I've never seen it so decimated. I mean, it looked like it was almost empty. I mean, it got front row parking in the middle of the day kind of things. And I ran across a buddy of mine who's a vendor there, and I was like, "Hey, how's business?" And he said that typically he would make his entire entry fee, which is $3,200. He'd make that in a day. And I saw him on the first Friday, so 5-6 days in, and he's like, "I'm not even 30% of the way there." So that's for the corn dog and Twinkie people. So I just want to say that it's like you can really see it there. And then the second thing, I was listening to you guys about the Bitcoin and gold, and my sister was got caught in that South Carolina, and she didn't have power for probably 3 days. And so I'm just curious, like everybody's going back and forth, and it's like how would you access gold online anyways, unless you have a physical gold, obviously. And the same with Bitcoin. I mean, she had $1, unfortunately, and she doesn't listen to me, but she only had $1 of cash in her pocket, and every place that was open would only take cash, and including gas stations, which you waited 5.5 hours to get a gallon of gas, and the Walmart that opened, or excuse me, Target that opened and would only allow cash and would only allow a certain amount of people in. How would you even access like Bitcoin or gold if it's not tangible, like in your hand?
That's a very good point.
Well, I guess the way I look at it, if I have a lot of gold, it's probably stored somewhere not in my house because I don't want people to come and take it. Okay. So if I'm in a disaster area, the last thing I'm concerned about is my gold or my Bitcoin at that point. At least I know with electricity going out, okay, that I still have it there, just like my gold is sitting somewhere. Okay. If the whole world is collapsing, then that either one of those is not going to do you any good. It's like your house. If your house is a store of value for you and is part of your portfolio of your retirement plan, I'm going to sell my house and move down with Trent in Florida and get a smaller place. And my house gets hit by a tornado and I don't have the insurance to build it back. It's the same thing as, losing my Bitcoin basically. But I look at it as an investment. Okay. It's an investment. I have vintage cars. If those get wiped out, or they can be stolen, I have crops that can be burned. We had a huge fire here last weekend, not on my land, but a neighbor's land. We fought for a day, caught in the cornfield and just burned and almost, they said it didn't get that stopped. It went all the way to Kansas. I mean, it was that windy. It was that big. I've never seen so many people with shovels and water and just going. And we had the entire county where I live, the second largest county in Nebraska. The entire county's fire departments from all their rural came to this fire, along with the city of Lincoln's fire department. It was huge. So that's gone. Okay. So again, I look at it, if I'm worried about, preppers or the end of the world, the last thing I'm worried about is my Bitcoin. I'm worried about eating. I'm worried about security. I'm worried about energy. That's what I'm worried about.
I think Jason brings up a very good point of what we are used to as a currency in the United States, and that is the dollar. And if an event like Asheville and that area, everybody is defaulting to what they commonly use, and that is US dollars. So I guess it's a question of if you had a pretty catastrophic event like a EMP, tripping the electrical grid, or some big hack, what would be the natural default to when it came to currency? And I think at least for a while it would be US dollars,
But how
until they lose confidence.
How are you going to get that if all the power's out and you don't have any money? You have to go to an ATM or a bank that's not going to be open. Okay. Or you're out of gas and there's no electricity and you got to go to a pump that relies on electricity to pump,
Yeah. No,
You keep your money inside your freezer.
That's it. I mean, all the ATMs were down. All the banks are closed. the gas stations that were open, they were on generators, and it was a cash and carry, and that was it. Target has one of those massive generators, but once they were out of gas, they were done. So that's why they were limiting people. But it was all cash and carry for the first 4 days for them. So that's why
Yep.
I think honestly, if it were to go beyond like 4 days, things get real weird, because most people don't have a couple grand sitting in their underwear drawer, in cash.
Well, we
Most
know
people
where
don't have gold.
we know where Trent keeps his money now, guys. So if you go to his house,
It's own
At his
like
trailer?
cellular.
yeah.
It's the Iron Dome of my house. So but yeah, I think what we're talking about is some major event where the majority of Americans don't have cash on hand. And so we are so electronically dependent, really everything goes out the window at that point.
Well,
Yeah,
isn't that
go ahead.
sorry, Mark.
Go
I was
ahead.
gonna say,
No,
wasn't
go
there
ahead.
a movie recently, not the movie Civil War. There was another movie that I think Obama helped in
Julia
produce it.
Roberts and Ethan Hawke.
Yeah, wasn't it like there was cyber warfare and basically they wiped out the financial system, and then spread propaganda and stuff like that. And then in those instances, that's when your cash means nothing, when you can't access it from a bank. If they were to be hit for some reason, then I don't even know what we would do. I guess it's what we're talking about now.
Yeah.
I mean, it's already here, Miguel. As far as I'm concerned, go try to take $10,000 out of your account today from a bank.
Yeah.
Seriously. Yeah. I mean, I think even ATMs, where I don't even know what they limit to, $200 a day or whatever. I don't know.
No, actually,
No.
funny you say that, because Bank of America is allowing 2,000 now an ATM withdrawal
Yeah,
limit.
3,000.
3,000 at Chase on the
Oh, okay.
on the interior ATMs, not exterior.
Got it.
Okay. But still,
But still,
Okay.
you're right. If you need it all, if you have a lot and you needed it, what are you going to do about it?
yeah.
Yeah.
And I don't know if you've looked at those bank agreements you signed, but the money's basically theirs. Once you,
Exactly. It's
Yep.
it's theirs until you pull it out.
Yeah.
and try pulling it out all at
Kerry
once.
actually years ago ran into that problem where he was trying to transfer money for payroll or something like that. And the representative at his local region's bank said, honestly, it's not your money while it's with us. And it was sort of that eye-opening, and that's how they could easily shut stuff off. So wow, this is becoming the platinum swing trading prepper call.
I think it brings up good points. We're talking about Bitcoin or store of value or gold, and I think it also brings up just your own personal risk management and what would happen if, the power went out. See here where I'm at, we can get a blizzard and last winter we were stuck here 7 days. We couldn't get out because the plows didn't come. Okay. So if the power goes out for a few days, I've got enough wood and wood stoves to keep the house warm. I've got generators to keep everything else rolling, okay, with fuel. Okay, now could I do that for a year? No. But those are the kind of things you think about when you live where I live, okay? And I think if you live, in town, which I haven't lived in town for 30 years, I don't think you think that way as much as you do here, because it can happen to me over a winter, or a tornado can come in and wipe out my power for 3 days,
Yeah.
and so I don't think you think about those things unless you actually have a possibility in your head that it's going to happen. And it does happen to me once in a while. Like I said, 7 days before I could get out, and you had to have enough food. The money doesn't mean crap when you're stuck in your house, but that's what you got to have.
When
Fuel.
Sandy hit New Jersey, we were out of power for a month. No power for a month. Businesses were totally shut down. There were generators, gas generators outside of business just to get internet access.
Is that after Sandy?
Yeah.
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 I worked downtown Manhattan and the communications were down for 8 months.
Yeah.
Pizza place
Wow.
couldn't do credit
couldn't get
cards
pizza, yeah.
because the communications were down. All the cables downtown Manhattan are underground, so when they flooded with salt water, gone.
It's done.
Yeah.
Yeah.
gone.
Yeah.
It was the same when I was there in 9/11 and the tower went down, my cell phone didn't work anymore,
Yep.
you know?
Well, a
It
lot of
was-
that was due to volume.
Yeah,
Everybody
That-
was on the phone calling everybody and their mother's aunt.
yeah.
Yeah.
We were
And
we were
that's
lucky
also-
enough that we were
That's
lucky enough
also
to
when
have,
your infrastructure wasn't built out that much at that point either. To
yeah.
handle that kind of volume.
Yeah.
But it was my understanding that one of the biggest towers was on top of one of the trade centers too. When I went
That
down,
was
it
the
took-
television towers up
Was
there.
it television? Okay.
Yeah, not so,
Okay.
not so.
Okay.
What do you think needs to happen for the market to get a reality check on what is the real state of the economy? Do you think it'll be some big event, or will it just be like, okay, elections are over now? Let's say an administrative term change or administration change, if that's the case, obviously, if Trump wins and stuff, and then it'll be like, okay, well, now let it all go. Basically, the Fed will
Yeah.
drop. You let it all just
Yeah.
crumble.
You know,
Well,
I
I-
think about that all the time, Miguel. What's going to happen? And Trent and I were talking before this call, and I said, well, remember when Trump won in 2016? I was coming out of Florida and driving up to Memphis at that time, and I remember that the next day, the day that after he won, the markets just right out of the gate took a dump, 1,000 points down, and then they came roaring back. And I think I don't know, they were up 1,200 points or something like that from Trump. And so it's interesting to see how that's going to work out, Miguel. And I don't know, but I thought about that. Is this just let's piecemeal this data together and see if we can get over the finish line before it all falls apart, and then the dam. I've only got 10 fingers and 10 toes that I can stuff in the dam. And we'll see. What do you guys think?
It's got to be.
I've honestly thought a lot about this because you think about the .com blow up, declining earnings. Then of course 9/11 fueled that. The housing debacle. Lehman comes out and says we're insolvent, we're going bankrupt. Big event. The pandemic, big event. So what would be the big event today? And I think it's a combination.
Commercial real estate. There was another, I believe there was another sale in Manhattan.
Yeah, we talked about that. Yeah.
There was just another one that went on the market, and it went for 25% of its value. So what bank is holding those notes?
Yeah. I
There's
think it could be a banking situation again.
Yeah.
It could be an earnings. I mean, how much weight is on the shoulders of NVIDIA? I mean,
Wow.
if they
A
were to
lot.
slip, what could happen?
Well, look at what ASML went. When that took it down just from ASML.
Yeah. I mean, that was 4.5% shaved off in a day.
Yeah.
So I honestly think it's something that we're not thinking about, and it's something much
What's
bigger.
going to kick it off is going to be a trade. Somebody's going to do a trade in the background that it's going to kick off all the algos and the black boxes, and it's going to become a roller coaster down. A lot of it's going to be due to S&P SPY type scenarios.
Yeah, I mean,
Because once you start selling that, the propensity to continue selling is going to continue.
well, you look at all the derivative contracts on that thing.
Yeah, the derivatives.
That's gigantic. That's trillions of dollars.
Yeah.
Right. And that's a safe investment, if your modern portfolio theory. And what is it doing? It's going to create that scenario that you don't want to see. It's going to force sell.
Yeah. I can't disagree with you, Mike. I think that's you're spot on.
So you're saying you're saying momentum selling. Basically, there's going to be huge amounts of selling, and then
What you're going to see is
everyone's going to follow.
you're going to see a small, what you think is a small change, but what that's going to do in the background, all the algos that are based upon the pricing,
Yep.
all it has to do is hit one algo that has a lot of
Leverage.
liquidity that they're responsible for. It's going to cause a downstream effect. That selling of that is going to kick off other algos that are going to kick off. And it's like a flash trade. You know,
Yep.
you had one trade that kicked and the market went to shit in a nanosecond. That's what's going to happen. It's going to kick and continue to roll and create its own momentum of the downward spiral.
We
Yeah.
talk on this channel so much about what's going to kill the market. Meanwhile, this market continues to go up. So you got to be cognizant of that's all we're talking
Go ahead.
about, how things are dying. So you can't miss opportunity though on the sidelines.
I don't think I said
Stocks are
that. I
going
don't
up.
think I said
Yeah.
that, Paul. I think I
No,
said that's why we
no.
swing trade.
No, what I'm saying is the thought, the feeling, the breath is the world's going to end.
No.
And
Well,
meanwhile, these stocks are going up higher. So what I'm saying is don't let it scare you though. That's my only
But-
message. I'm not
No,
hearing I'm not hearing discussions about why we're hitting all-time highs. That's the only
Because we don't know why.
Yeah. But
We really
meanwhile,
don't
you
know
don't
why.
so Bob, you
Uncertainty.
don't want to stay out though. You don't want to be like
Has
know.
anyone
No, but
anyone
I
said,
want to
has
have
it-
I want to have my toes at the door.
yeah, that's well, that's why
Right.
that's why we have stops. That's why we teach stop
Risk
orders, you
management.
know, and to get out when something happens. Okay, like ASML, man, if you were in that, you lost a lot of money in that day.
Yeah.
Okay, could that have been prevented? Yeah, with my trading plan, I would have been out before earnings. Okay, so it would have saved me. Okay,
I think it's
now that's
interesting
not
though.
everyone's
what-
trading plans. And I agree,
At-
Paul. And that's why I said that's why we swing trade. And you can go look at paper trade portfolio. I'm still swing trading. Okay, it's still working. I'm not stopping. Okay, I'm just trying to. I've been through this from a professional point of view in a professional financial services company, where thousands and thousands of retail investors thought that they knew what the hell was going on, and they lost everything. So
Mhm.
when I say this, I've seen what's happening in this market. I've seen what's happening in these reports. Okay. And I just don't want people to get, you know, when Steve Leisman comes on, like Bob says, and everything's rosy. And you say it's a show, Paul, and it is, but most people don't know it's a show. They see these guys come on and say, oh, you know, go buy Citigroup because I bought Citigroup. Oh, I'm going to buy Citigroup. Okay. They follow. Majority of retail investors will follow. They're not a part of a team like we have here where we discuss these things.
A point going back to Trent when he mentioned Lehman and collapsing, you know, that was a slow burn. It took how long? 7 months for it to really come out. You know, they came out with their hedge funds that there were problems with the mortgages was, I believe, in January, and by July, and then it blew up because it rolled and rolled and rolled. But if you listen to
Yeah.
CNBC and all of the others, everything's great. Mortgages are good. Buy, buy. Your money's safe in the banks that are backed up by agency debt. This is what you get is people telling you one thing, but the signals, as Mark is saying, are
Oh.
flashing red.
Do you
So that
remember?
Yeah, well,
says-
Do you remember,
wasn't-
Mike? Do you remember, Mike, when Jim Cramer was on and he's like, Bear Stearns is good. Go buy Bear Stearns. And like the next day, boom.
gone.
Yeah.
Yeah. Well, and I think one of the
That's the sign.
I didn't hear Jamie Dimon's earnings call, but I had heard that he was pretty heated
Yes.
about
Very.
the credit
Yep.
card delinquencies
Very.
and that. And if you think about that and just what we've discussed is there an opportunity? Yes, there's a great opportunity. I mean, heck, if you bought GLD 5 days ago, you've made some money. Absolutely. I think it's one of those things that if you have to keep in the back of your head that when it goes, it'll go like that. It'll be a 4:30 in the morning headline on
Exactly.
CNBC that you don't hear because you're still
Yeah.
asleep. That triggers the whole thing.
And you better
And I
have your
think it
stops
only
in.
takes one.
Yep.
But I'm
It
up
only
at
takes
4.
one.
I'm up at 4.
Well, then
Trent,
again, that's
so-
not going to kick off until 9:30
Okay,
when the
well, you're
market.
good.
Yeah.
You can see the shit show all begin.
That's,
Right.
that's
Exactly.
But I think the thing is, and to Paul, to your point, there are incredible opportunities. There is
Absolutely.
opportunities to make money. Absolutely.
We see
But I
them every
think we
day.
have to keep in mind risk manage number one, risk manage number two, and risk manage number three.
But
And
these
keep in mind
events,
that it doesn't always go up.
these events always start in the morning. Early in the morning, these events that you're talking about, they hit the market, early in the morning, and they carry through the day. They don't happen in the middle of the day in most cases, but
Yeah.
it's something that built up, and then Japan, the Nikkei, and all the other markets are reacting, and then it hits our market, and the bottom falls out.
I think you look at, I mean, I just look at, I mean, I've been through a lot of these. 87 was my first one, and that thing went down 52% in 2 days. Okay.
Yeah,
And we didn't have online trading back then. You had most of your money was in a mutual fund or your IRA or whatever. So you weren't going to get out of it, To Mike's point, think about now how many people are passively investing in ETFs. And when those algorithms trigger sell, those ETFs are going to have to sell too. Okay. And think of that, how it just rolls over on itself, and I just, I've been through it. I've been through it in the great financial crisis. I want to make sure that everyone knows their risk. The number one rule is, don't lose money. That's the number one rule of making money, is don't lose money. And when I look at people like Warren Buffett, who has the highest level of cash he's ever had, and he keeps selling Bank of America. Okay, why is he selling Bank of America? He's been in Bank of America forever. Okay, look at Nvidia. Look at all the executives who
but he
sold their
bought it.
stock.
He sold it. He bought it, then sold it again. Did you hear
Yep.
that?
Yeah,
In a matter of 24 hours.
yeah.
I
And
hear
everyone
some
thinks everyone
guys are
thinks he's a
great.
long-term investor, and he's not. He does not diversify very well, and he sells to get out of crap if he doesn't like it.
Then
Go
again,
ahead,
we're
Paul.
also not getting that information right away. Buffett's the only one that has an extra quarter where he doesn't have to disclose. So you're
Right.
getting the information 6 months behind where everybody else is 3 months behind.
Yeah.
So, that has to go into your factor of whatever Buffett does. Okay,
Yep.
well, he's 6 months out now.
Yeah.
Paul, and I understand your investment strategy and style. You're in and out. You're real quick, and so your risk is much more limited by your approach. And I think more and so your risk, from what I understand, your risk is not as big as, say, somebody who's in a 401k plan, or who is in a more of an intermediate term trade. So you're managing your risk much differently than the average Jane and Joe. I think, though, having sat, here's the thing: Mark and I think both have sat across the table from people who have lost everything, and so we are more conservative. I've had my life threatened by a client as he lost money during a .com blow up, and so we do. I think I'm an eternal pessimist. I try to be optimistic, but I think you have to understand, when you've seen people lose everything because they thought the world would just keep going up, it cautions you a bit. So I do agree there is incredible opportunity in these markets. It's just, how do you risk manage it? And so,
I agree.
I just wanted to give you that credit.
I agree with you on that too. And we haven't stopped. And I said that's what makes swing trading so good. That's why I like to do it. That's why I like technicals, because it gives me an opportunity to manage my risk. So I'm not saying we should stop doing it, and I have not stopped doing it. You can go look at over 300 trades on the paper trade portfolio of opportunities. I had over 34 listed stocks this week on Sunday and Monday of potential swing trades. We're not stopping. I'm just saying that what I'm seeing in economic reports, what I'm seeing in unemployment, what I'm seeing in how the CPIs and inflation looks a lot like what I saw in the 70s and 80s, and looks, a lot of what I'm seeing in credit looks like a lot of things I saw in the great financial crisis. So I mean, you can take it or leave it. You can say, Mark is full of crap. You know, he doesn't know what he's talking about. He's never lived through this, and it's going to be roses and lollipops and unicorns and sunshine for the rest of our life. And it may well be, and I hope so. I hope it's true. But there's just history repeats, and I've seen it several times over my lifetime. I just want to make sure that we don't get sucked in by the establishment who tell us with Steve Leisman and the talking heads how great everything is. And having, 10 companies be the driver of the entire index or the market is not the way it's normally at. So just be careful.
Do you think that head?
I
do you
think
that
I think
head-
everybody is
Go ahead,
careful.
Paul.
My point is my point is QQQ in the last year is up 36%. Now, I can't claim I did 36%, and I'd like to think that I'm a better trader than QQQ, but I'm not. And it's we can't have this entire community talk about we're going to crash. I've been through a crash, and it's going to happen. But meanwhile, 36%.
I never said that. I never said that.
Well, but my point is the breadth of the conversation is not, it should be halfway. You say, yeah, these are our concerns. This is what's going on. But here's also what's happening. This is true. We're not talking about why is QQQ up 36% in the last year.
Well, I can
It's
tell you
NVIDIA.
exactly because there's seven stocks that drove it up, Paul. And if you want to talk about that, Bitcoin's way up higher over the year than QQQ. Bitcoin started the year probably, I can't remember, but it's higher than QQQ.
What does that tell you about the market?
Yeah.
It's one-sided. It's just one silo.
Yep.
It's fair, and
Well,
that's
QQQ hasn't been this high.
QQQ
I mean, sorry,
is
QQ
what,
has
100 stocks?
74.
QQQ
No,
is
I'm sorry.
100 stocks. How
Run
many
by
of those are
seven.
up?
Run by 7 stocks.
7 stocks.
But you're smiling though, right? It is what it is though. It's generating money.
sure.
Yeah, but
So-
you can't judge what's going to happen tomorrow based upon what happened yesterday.
But you can't go through
Informational
life though. You
points are
can't go through
there
life
for
that way
you
though.
to draw a conclusion of what potentially can come. Okay? If you want to think that the markets are going to be great, you're going to make money on them constantly, you need to factor that into your overall approach to it. If you don't,
Absolutely. But
if you don't, you're going to get burned.
of course you are, and I've gotten burned. I understand that. And my mother and my father. But they also know that there's a lot of money to be making. So my point is the breadth of the conversation is not talking about why something's up 36% or those top companies that drive it. The breadth of the conversation we have here is it's correcting. When's the correction going to come? That's my only point.
That's not it.
Taken.
I disagree.
I,
I'm telling you, my purpose is to go through these reports that we get weekly, which causes market sentiment, causes market emotion and direction, and say, well, don't get caught up in it, because from my experience, that's what caused a lot of people in the dot-com bubble and the great financial crisis. And I had to listen to the margin calls get called and people's lives being ruined because they thought they knew what they were up against, and they're not. They don't know. They don't know that 95% of the trades are by computers, and they're all in algorithms, like Mike says. And once that goes, you're gone. And then they don't know, Paul, that you should stay in the market for all your life and never get out. And then you get out, and the institutions get out, and you're stuck there for 12 years before you get back to even. And you were going to retire in 2 years,
I understand
That's
you, but
modern
I don't think
portfolio
that's this
theory.
audience. I don't think that this audience, you're speaking to the breadth of the entire people that trade retail trailer, but this audience and this platinum are very aware of that.
Well, not
Yeah.
necessarily,
I
because we have
disagree.
beginners and new people here that are just learning.
I
Right.
disagree with that.
I disagree, and I'm one of the rookies and I pay attention to a lot that you guys do. And Paul, I've taken your advice a lot. Like, I'm new to this. I'm 2 years into this crap. So this is very educational for me. So I appreciate you guys. Paul, I definitely understand where you're coming from, but I speak for me being a rookie that this is very informative. I literally am going to go upstairs and talk to my parents about this. Like, hey, your point of view and Mark's point of view and Trent's point of view, because this is stuff that a lot of people don't think about. I'm sitting here working my ass off for a company that gives a crap less about me. but they're
Yeah.
with my 401k. So I appreciate what you guys are saying. I appreciate your input too, Paul, and you've taught me a lot. But I will say, from my point of view, a rookie guy, I appreciate all of it.
I think that Paul's trying to say is just to have a more balanced mindset of both sides of a bearish and bullish kind of way to approach the market on taking advantage of these opportunities. Because you got to think of it almost like a hedge fund, right? These companies are not out there telling their employees, hey guys, the market's going to tank today because of unemployment, because of this, because of that, but keep doing what you're doing. No, they're just like, I want results. Take advantage of these opportunities. Where's the money? Where's the trends going? Where's the this going? And I get that's what you're doing, Mark, with the swing trading. But you're always there concerned about the risks people take. And I think Paul is saying that most people on the Platinum channel were all like, I don't want to say mature adults, but we all know the inherent risks of the market. And we're not going to be here saying, well, Mark made me do it, or Trent made me do it, or Kerry made me do it. I mean, this is not your market audience. Like, yes, we understand the risks, and I get that you have to disclose those risks in every post you make and stuff, right? Or that you write or put out there. But in the end, I think that the Platinum channel, I think we're here to make money, and we're also here to kind of hear the news of what you're doing. I like it. Because I have two mindsets, right? I have one mindset in my strategy where I'm aggressive with these swing tradings now that I'm learning more about it, right? But I also have a mindset of macro, of knowing what's going on with the economy, because my biggest assets are my 401k and my house. And if those tank, I'm pretty much shit out of luck with life, right? So I am fully aware, and I like what you're spreading out there, the news that you're putting out there. I like it. But I think what Paul's saying is that these discussions that we're having every Friday, even though they shouldn't just be more about what we're hearing from you, Mark, every day about the macro. Instead, it should be focused more about what opportunities we can do on a weekly basis to take advantage and make more money, right? While we're waiting for this demise of this economy that we're all feel that it's coming, right? This pending doom. But you know what? There's money to be made, just like he was saying the QQQ making 36%.
Well, Miguel, and I appreciate that. And I work every day. I'm up at 4 a.m. looking for positions, and I'm up for weekends looking for positions, which I put out there. So it's not like I'm not putting out stocks for you guys to go look at. I'm not going to tell you when to buy or whatever, but I will tell you based on my trading guidelines, which I don't know what everyone's trading guidelines are. You should have your own that support your risk management style and how you want to trade. But I do it based on mine. I've also added in, high flyer list and how you go get that. And I've also added in if you want to trade under the 200, which you can make money doing that too. So it's not like I've just said, hey, don't trade because we're afraid of the market. Okay, we're not afraid of the market. But I think you need to know what moves the market and unknown and known market conditions. Just like when the Fed comes out with an FOMC meeting, what's it going to do? What's it going to do to the market? Just like when a company comes out with earnings, what's it going to do? Okay, what's your strategy when a company comes out with earnings? It's a 50-50 proposition. And years ago, when a company came out with earnings, you might drop a quarter of a point or go up a quarter of a point. Now you go up 15 or 20% up or down. Okay, it can be devastating, especially when swing trading. When I swing trade, I don't even know what some of these companies do. I just look at the chart. So I'm not a fundamental trader, but I do have to know what's going on around me to make more common sense decisions. So that's what I try to do here. And if you look at, I'm very conservative. I'm not going to go and I'm not going to be in 20 positions every day. Not as a swing trader. That's not the way I do it. Other people may want to do it that way. I don't sit here all day and look at my screen. The way I got swing trading so I could go have a system, follow my trading guidelines, go live my day, come back, see what hit, see what didn't hit, and then get out. And I get in the beginning of the week and I try to get out by the end of the week. And that's how I do it. Okay. I'm not hiding from the market. Go ahead, Trent.
I think the point I'm hearing is there's a 50-50 to this. If we can make the call, the risk management and the opportunity, it'd be appealing to, it would be more, it would be a better, more productive call. Is that what I'm hearing? Get a yes? Is everybody frozen?
I said what I said. I just said, we could I agree that we should be talking
Okay.
about, yeah, I agree.
Okay, perfect. Because this is about, and Mark busts his ass every day. I see what he's putting out. We do definitely need to highlight those opportunities as well. But I also, as Mike has pointed out, me seeing the world from the derivatives world and what could happen, I think it's also, we need to pay attention to that as well. So if we can split this call sort of in half, I think it'd be possibly more productive. So we'll work on that. It's just so much crap going on. I think
Well,
it just gets overwhelming.
We can make it whatever you guys want to make it. I mean, seriously, I don't have to, I spend a lot of time going through all this information, and it would save me a ton of time during the week if I didn't do this. Okay.
Yeah.
And that's fine. I can do that. I mean, I'm happy to do that. I'll do it anyway for myself. I just won't bring it into the meeting.
I think it's important though that we highlight really key points, as in when the opportunity, if we do see a bottoming, if we do see a change in the direction, we highlight the opportunity points as well, just as much as we're highlighting the negative points. But I think overall, it's like, let's talk about opportunities as well in conjunction with the discussion of the risk management side of it. So I think it makes sense. I get it.
Well, I think we kind of flow with the way the flow went. Like last week, we spent some time on looking at the macro, and then we spent some time looking at, my trading guidelines, just to get it back into perspective of what I'm doing and what I'm trying to teach in basic technical analysis, and what you guys do with that and expand upon it or make it your own, which is great. Okay.
Yeah.
But I have to have a baseline here to make this work, especially for when we get new members in, who just start, and you start in the classroom, and then you move to the simulator, and then you move to the plane. You don't start in the plane. And so I got to be mindful of the different levels of people and talent that we have in the Platinum channel. And that's what I try to do.
Well, Paul, I hear your point. Miguel, I hear your point. Mike, I hear your point. Bob.
What do you think, Bob? I'm curious what Bob's thinking. He's quiet. It scares me. Come on, Netflix beat.
I mean, I'm always concerned. I would consider myself a pretty experienced trader, and I more think of the trader that doesn't know, because I've been there and I've lost everything, and losing everything is not a fun scenario. So Paul, I get what you're saying, but I think sometimes that can be dangerous to the person who doesn't have the experience, who's not tuned in every day to what's going on. And you have to be tuned in to the markets and be tuned in, even though it's a show, there's pertinent information. I will say to you guys that, have you guys listened to The Compound with Josh? It's really good information that comes out of there. There's a few other podcasts you should listen to that I listen to, that I find and I can give you a list of them. I find so much pertinent information from these guys, and how they talk about different companies. But I don't take what everybody says is Bible. I take a little bit of everybody's information, and then I trust, but I verify. And I think that if everybody does that, and to be very honest with you, at the end of the day, when the markets fall apart, it's every man and woman for themselves, because that's really what's going to happen. No one's going to come and help you and bail you out. So if you have $1 today and the market falls apart tomorrow, that dollar is gone. So you need to protect it. As I said last week, you need to have those stop losses in place.
Yep.
I think
So, I don't know if
we
I answered your question, but all I'm saying is and instead of looking at myself, I'm not concerned about myself today because I'm a very experienced trader and I can take some lumps now. But the ones that can't take lumps, that's high risk. That's the way I look at that.
Knowledge is king.
Yep.
Absolutely. All right, guys.
Good spirited conversation today.
Yeah. And first of all, I really appreciate you all, every one of you, and everybody who's going to listen to this call,
Absolutely.
for participating, for feeling comfortable to voice their opinion. I appreciate that, and I totally respect it, and I encourage you. It's the kind of thing we take as input, and we go back to the table, and we discuss, okay, how can we make this better? That is my mission for Best of US Investors: make this better, save your ass when things get bad, and to help you profit when things get great. So I really appreciate all of you guys and what you do, and everybody who's listening. So
can I just say one more thing before you close?
oh God, Bob, would you just shut
I
up?
have a friend. Listen, and probably some people here
I'm
can.
kidding with you.
Some people here can probably, rationalize this. I have a neighbor, and he made 100 grand in a day in the market. Now, I separate it between investing and gambling. Okay, if I invested the person based on gambling, he's a gambler. Okay, he's the type of guy go into something and go into it in the wrong direction of the market. The point that I'm making is you have to assess, are you an investor or are you a gambler? And gamblers, at the end of the day, usually lose in most cases. So I just wanted to put that out there. And then there's times that he has that 100 grand, and then I see him the next day and he tells me he lost 50 of the 100. Crazy.
Yeah.
Anyway, sorry. I just wanted to.
No, it's all good, Bob. I was just Joe.
That's all right. You can bust my chops. I have very thick skin.
Yeah. All
I
right,
can
guys.
take it and I
and
can
gals.
dish it.
Yeah, well, I know.
No Tesla yet, though, right? We're still at above the 200.
We're still above 200, but
Got
did you
you.
see Netflix?
I did.
Yeah.
Nice one.
It's up 70 something dollars today.
It's a good
Right.
deal. That was
Yeah.
a good one.
But yeah, Trent, I mean, what you said is, and what Mark said is right. If we can maybe do a segment of these Friday calls to just summarize what's going on with the macro, but then give the other portion, or the bigger portion, to just setting up trades, let's say, or possible opportunities for the following week or something like that.
Sounds good.
Because what we're doing, I mean, I already read all of Mark's posts throughout the week every day, with what the market news are, what his thoughts in Mark's office are, and all those macro kind of things. So on Friday, I kind of, I like to hear about things, opportunities that we could take advantage of. But I understand that that's just me, and of course, there's a lot of other people who are starting out. I guess that's up to you, Trent, and Mark, if you're like, as you're running the business, your customers are talking, and then so there's how do you solve a problem where, how do you kind of like make, let's say, veterans in quotes, kind of the veteran people happy while still kind of still addressing the needs of new people in terms of knowing how to risks, knowing all that, being aware of the risks and everything like that. But you can't always default to either group, because then if you default to the new people, then the other people feel kind of like they're not getting what they want from this, right? So
Yeah.
that's something for
I
you
think-
guys to talk.
Yeah, I think we'll come up with something. Definitely, and I really appreciate your input on this. So I've got to go because my bladder is full.
A little more
I
information we need
apologize.
to
One more
know.
coffee.
This more coffee,
Thanks, Mike.
more middle age. But I really appreciate y'all, and we'll go from there. Have a good.
Take
We'll have
care.
the 3 o'clock call with Kerry.
Real quick
And,
on Mark's office, I posted an article. It's analysis of 24 to 07.
Okay.
Okay,
FYI.
Cool.
Thanks, Mike.
yeah, we'll check it out. All right, thanks, guys.
Thanks,
All right,
guys.
guys.
See you guys.
Appreciate it.
Bye bye.
Thank you all so much.